The stock market continues its rapid ascent from the April lows when everything looked so dire and investors thought the sky was falling. Well, look where we stand now. It seems like on a weekly basis we hear about a new record high in the S&P 500. But I do want to warn you, we are coming upon a historically weak period for the S&P 500. As such, I want to prepare you and give you a list of stocks to have on your watch list if we do in fact get some weakness. As such, in today's video, although we're going to be focusing on long-term gains, I'm going to be discussing 3 stocks that could double over the next few years. No, we're not talking about massive companies going from a $4 trillion market cap to an $8 trillion market cap. These are companies that have great potential and could be doubling your money in the next few years. So make sure you stay tuned throughout the entirety of today's video. And before we jump in and unveil them, do me a huge favor. Click that like button down below. Subscribe to the channel, and let's jump into it. Hey everyone, Mark Roussin here, back for another video. As always, I'm a CPA and not a financial advisor, so please do not take this as financial advice. And before we begin, let me thank today's video sponsor, which is the Motley Fool. The Motley Fool has a ton of great resources and products available for investors of all different levels. And right now, if you go to fool.com/Mark, you could check out their 10 best stocks to buy right now. All right, let's jump back into our video talking about 3 stocks that could double your money over the next few years. And this first one we're going to start with, I'm going to warn you, it comes with the highest risk potential as well. High likelihood of doubling, but tons of volatility. So if you don't like volatility, you may be better moving to stock number 2 right out of the gate. But if you don't mind volatility, the first stock we're going to be discussing is going to be Rocket Lab Corporation, stock ticker RKLB. When it comes to Rocket Lab, they are a disruptor in the small rocket and satellite launch industry. This stock has been on a tear of late, and I've been utilizing options as a way to get in and out of the name, but looking to build a position of my own as well. The company has a market cap of $21 billion, and over the past 12 months, the stock has rallied roughly 800% as an investor's bet on an ambiguous growth trajectory, and so far, the bet has been paying off. Year to date, shares of Rocket Lab are up 75%. Many of you may be watching this video and not all that familiar with Rocket Lab, so let me bring you up to speed. The company isn't just launching small satellites via its Electron rocket, but it's building out an end-to-end space infrastructure business, including satellite components, on-orbit services, and more. Revenue for the company has jumped from $35 million back in 2020 to an estimated $577 million by the end of this year, which would equate to a 32% year-over-year increase from 2024 revenues. The key catalyst for Rocket Lab is going to be the Neutron rocket. The upcoming Neutron vehicle is set to unlock medium lift missions, including national security launches, and could make Rocket Labs a credible competitor to SpaceX's Falcon 9 under the U.S. National Security Space Launch Program. When it comes to valuation, despite strong growth, Rocket Labs isn't cheap, as it trades at a 43 times sales multiple, which reflects the high risk, high reward profile. If execution goes well, doubling from the current levels to a roughly $80 price target isn't all that out of question. It's very doable. And that leads us to stock number 2, which is going to be Advanced Micro Devices, stock ticker AMD. And when you look at the economy and all the spending that's been taking place over the past few years, most of it has been centered around AI, or artificial intelligence. And AMD is going to be right in the thick of things. No, they're not the largest. We're going to leave that to NVIDIA. But NVIDIA has an over $4 trillion market cap. AMD is a close competitor, but usually left in the dust, and a much smaller market cap, making it a lot easier to double. Speaking of market cap, when it comes to AMD, they currently have a market cap of $278 billion, making it the largest company on our list here today. Over the past 12 months, shares are up 30%, but year to date, up an impressive 45%. Although AMD is always a second fiddle, always a bridesmaid, never a bride to the likes of NVIDIA, again, NVIDIA has a $4 trillion market cap. We don't need AMD to surpass NVIDIA for this trade to be successful. We just need AMD to close the gap. So what's going to be the catalyst moving higher? Well, AMD's data center and AI accelerator business is accelerating with new products like the MI350 series, delivering superior cost per token performance. Versus NVIDIA and already being adopted by the likes of Meta, Microsoft, OpenAI, and Oracle. CEO Lisa Su recently stated that the global AI chip market could exceed $500 billion by 2028, and AMD plans to capture at least 5% of that, which would translate to 20 plus billion in GPU sales per year. So do bear in mind that AMD is set to release earnings the day that this video is going to come out. So let's take a watch and see approach because you may get an opportunity to buy these shares a little cheaper. In terms of revenue, revenues are expected to rise nearly 30% in the second quarter, driven mostly by strong data center demand. Analysts maintain the stock a buy despite export challenges around China. The business is expected to generate 2025 revenues of $32.1 billion, which would equate to roughly 25% top-line growth. We want to see the profitability continue to rise as well. In terms of valuation, analysts are looking for the company to generate EPS of $5.78 per share over the next 12 months, which equates to a forward PE multiple of 30.6 times. Year-over-year EPS growth is expected to come in around 46%, giving the stock a PEG ratio of just 0.7, which is extremely attractive from a valuation perspective. If this is a company that continues to generate higher revenues but also expand margins, watch out, because this is a company that I have a lot of confidence in doubling moving forward. And now we're going to go to stock number 3, which is going to be Okta, stock ticker OKTA. And when it comes to two major themes for me moving forward over the next couple of years, it's AI and cybersecurity. I believe that cybersecurity could be even larger than that of AI, and that's saying a lot. When it comes to Okta, this is an enterprise identity leader helping secure digital and AI infrastructure. And that AI piece is what makes this stock attractive to both investors, but also businesses as a potential takeover target. The company currently has a market cap of $17 billion. Over the past 12 months, shares are up roughly 18%, and year to date, up 22%. When it comes to cybersecurity, some of the notable competitors include the likes of CrowdStrike, Palo Alto, Zscaler, Fortinet, and Cloudflare. As you can see from this fiscal.ai chart, Okta is the smallest of those companies, making the path to a doubling much easier than if we were talking about a sizable company. Okta provides identity and access management for the world's largest organizations, including AI-driven, passwordless, and multi-factor tools. They posted record operating profit in Q1 with strong free cash flow. Looking back at this fiscal.ai chart, revenues have reached $2.6 billion and free cash flow reached a record $742 million in 2024. Looking forward, Okta is targeting between 10 to 15% top-line revenue growth each of the next few years, with larger enterprise customers and AWS partnerships helping accelerate adoption. In terms of valuation, analysts expect the company to generate EPS of $3.30 over the next 12 months, giving them a forward PE below 30 at 29.7 times. EPS is expected to grow roughly 19% over the next 12 months, giving the company a PEG ratio of 1.5, which is a decent valuation. If the company continues scaling profits and sees margin expansion, this should gradually improve that valuation multiple. This is a company that has strong retention rates. And again, revenues keep climbing, and finding ways to be more efficient is going to help clear the path for this stock to double moving forward. So there we just looked at 3 stocks that I believe have a high likelihood of doubling over the next few years. In the comment section down below, let me know which of these 3 stocks you like best and you believe could in fact double over the next few years. And maybe there's a stock that you think could double but not on this list. Also let me know down in the comments. And if you haven't done so yet, I truly appreciate it. It really helps if you could just simply click that like button down below if you found any value whatsoever. And if you're new to the channel, hit that subscribe button so you're notified anytime we drop new content. And with that being said, we'll see you in the next one. Take care.